Hello, it's Richard Pears, FinextraTV. Delighted today to be joined by Guillaume Mascotto. He's from American Century Investments, and he's the head of ESG and Investment Stewardship. Hello, how are you?
Hi, Richard. How are you? Thanks for having us.
Yeah, pleasure. You're dialing in from New York today, so thanks for sparing the time to talk to us. So I was reading this new report that you guys have issued, the Emerging Market Sustainable Impact Report for 2020. And I wanted to get you onto the program today so that we can have a chat about that. But first, tell us a bit about your role and how you got into this sustainable world.
Sure. Well, again, thank you so much for having us. So, yeah, I've been doing this for approximately 13 years. Right after I finished university, I started my career in the forest products industry, which is a highly ESG exposed sector, as you may know, especially around sustainable forest management, water, and of course, community relations. But I quickly decided to move into more of the financial services sector in order to broaden my knowledge of not just the basic material sector, which is comprised of forestry, mining, and energy, but also around more technology, as well as healthcare and other sectors like banking. And so, a couple of years into doing ESG research at companies from MSCI as well as PIMCO, I was very attracted by American Century's specific, we would say, impact business model. As you know, the company is headquartered in Kansas City, Missouri, and is owned by the Stowers Institute for Medical Research, which is a world-class medical research facility that dedicates all of its resources in order to find cures for cancer and other gene-based diseases. So for me, as an ESG specialist, I thought this was the best place for me to work, because not only can I help institutional investors and retail investors gain access to sustainable investments, but also through that, make a positive impact on society, given that we distribute 40% of our annual dividends to the Stowers Institute. So here's a little bit about myself, and again, looking forward to the conversation today.
Great, and a bit about American as well, which was useful. So tell us the report. Give us a few highlights from the report. It's a weighty tome, but really interesting reading. But what were your key takeaways that we should be looking for?
Sure. Well, the first takeaway is that the emerging markets region, right, is, in our opinion, the region that is most in need of private capital in order to help the region develop itself. And it's not to say that there's no problems in the Western world or more developed nations, but we believe that in the next couple of years, all the way up to 2030, there's going to be trillions of dollars of opportunities, right, or market opportunities in order to realize these SDG goals in the emerging market regions in particular. So that's the first takeaway, is that if you want to have impact, if you want to contribute to social and economic development, the emerging market regions really affords you a greater opportunity to contribute to that goal. The second big takeaway is, when you look at all of the different opportunities that we have in the region, American Century Investments decided to classify those opportunities in 5 distinct impact themes. The first one is environmental protection. The second one is sustainable living. The third one is healthcare. The fourth one is education. And the fifth one is technological progress. And so we believe that these 5 broad themes can really enable an investor to have as maximum impact as possible in the region. And what we do is we map these themes to specific SDG goals using a pretty well-regarded taxonomy framework that has been spearheaded by Dutch and Canadian pension funds. And so in that case, we believe that this approach is best in class. So that's really a big takeaway, is the investors can really read the report and see exactly which of their investments fit into which themes, and therefore how they're measured by being aligned with their respective SDG goals. The third, we could say, highlight of the report is in terms of carbon. So, as you know, carbon risk management in portfolios are going to be a key point of 2021 and beyond. We believe that they were always a key point. In fact, we like to say that when it comes to the climate change, for us, it's more of the same that needs to occur in 2021 and beyond. But the report shows across 4 distinct metrics what is the carbon intensity of the portfolio with respect to the benchmark. But I'll just highlight that there's one particular metric that we emphasize, which is the improvement metrics. In other words, if there are companies in emerging markets that are a little bit more asset intensive than, let's say, a high-tech company in California, which makes sense, our objective as an investor is not necessarily to penalize that company outright because it has higher carbon emissions than, say, someone else in a more developed country. The goal for us is to engage with this issuer and seek improvements, encourage the issuer to make improvements. That metric in the report shows how fast the portfolio is reducing carbon emissions with respect to the benchmark, which is quite interesting if you are looking for continuous improvement and have, again, a positive impact through sustainable investing. And then the fourth highlight of the report, which is very important, again, is the breakdown of the portfolio per theme. And what we found is the large majority, approximately, well, it's not the majority, actually, I should say, a large part, which is approximately 48% of the portfolio's holdings, mapped to our sustainable living theme, which is quite important because that theme is basically everything that we consider as core for one to live a sustainable life. So that is everything from access to basic needs, right? So water, education, healthcare. And not just when we say healthcare, it's not just medicine, it's also therapies, right? But it's also infrastructure, right? How to enable a better harmony between urbanization, which is very important in emerging markets because a lot of the populations there still live in outside urban centers. So how to urbanize, but in harmony with ecosystems, which involves a lot of city planning, technological innovation, and the circular economy concept, which is very important. So that was another interesting highlight. And then the last highlight is when it comes to engagement, right? So we believe it's very important for an active manager to indeed serve as an active owner. So we don't want to be an activist. We want to serve as a active owner, engaging as a treasurer, so to speak, in order to help these companies make improvement in disclosure and also in ESG performance. And you will see from the report that we have a very extensive ESG engagement protocol whereby we engage with companies and we give them an opportunity to improve. We actually monitor their progress, report back to our clients, and then ultimately we can ourselves better measure not only the impact, again, that the investments may yield through their alignment with SDG goals, but also the impact that we have through engagement and showing improvement at the corporation level using our influence, if you will, as an investor on behalf of our clients. So those are the highlights.
Well, that's great. I mean, that's really a good counter through. Thank you for that. Give us an example of one of those. You had some great case studies in the report, which I like because it brings it to life for people. Give us unpack one of those examples that maybe we can see some of the the measurement, the benefits that you've spoken about here in theory, in practice.
Sure. There's one company that I really like because, again, it deals with a very important topic, which is education. This company is called China Education Group. It is a leading operator of private higher education in China. And as you know, this country has, performed quite well in terms of lifting people out of poverty. But we believe that there's still a lot of work to be done in terms of providing quality education to the most remote places of the world. And this company helps to reduce, in our opinion, via their programs, help to reduce poverty and also improve working conditions, right? And that is important because it helps not only to reduce income inequalities, but it also helps to empower women by elevating their social status and broadening their access to job prospects. Why is that important? Because in emerging markets, right, when it comes to inequality, the delta between men and women is significantly higher than in developed nations. And so we believe that education can serve as a launching ramp, if you will, for these women to have access to the professional job markets. And of course, in this case, there are 5 big SDG exposure. The first one, which I outlined, is the no poverty goal number 1. The second one is goal number 4, which is indeed quality education. The fifth one, again, quite straightforward, which is gender equality. And then there's also those 2 other goals that are quite important. Goal number 8, which is decent work and economic growth. And then goal number 10 also, which is reduce inequality. So that's an example of how, we seek to align our investment with these SDG goals, but also, and I'll close with this, because these companies serve, if you will, a positive social impact, there's also a growth potential as well. Right, so it's very important when we pick investments for this strategy that the holdings basically have to meet two goals. And these two goals are not mutually exclusive. They have to interact, right? So if this company is poised for growth because more and more of the regions in China are going to be, if you'll, brought up into or integrated into China's growth story, then there's going to be indeed economic growth opportunities for these companies, especially around education. But if we can do that at the same time as generating positive impact, then you have your sustainable investment thesis. We call this the impact thesis.
Yeah, and I think that's what was really interesting as well is that you spoke about measuring impact continues to be a challenge, especially true in emerging markets. And so if we look at that, if I'm sitting here as an investor, or even actually somebody else that wants to follow your lead around building active investment around the sustainable development goals, how do you do that? How do you measure in China, in education, that my dollars or pounds or euros or whatever are genuinely getting to the right people and doing what you've said? How do we track and do that?
It is definitely a challenge. We recognize it, but it's a positive challenge, I'd like to say, because if we don't recognize the challenge and we say it's too difficult, then we don't make progress. So the way that American Century is addressing this challenge basically is we are applying the theory of change framework in order to help us and help our clients also get a sense of how are their investments yielding positive impact. So as you know, the theory of change, which is a best-in-class framework, is comprised of 4 dimensions. The first one is input, which basically we identify the company resources that are used to achieving the desired outcome. The output is to identify which specific products or which divisions or business lines of the companies actually lead to impact, right? And then where it becomes challenging is those 2 other dimensions, which is the outcome and also ultimately the impact. So there's always a question that we get from investors: what's the difference between positive outcome and positive impact? So the outcome is to articulate and quantify what we believe are impact enablers, right? Whereas the impact is the actual impact or the projected impact that will contribute specifically to the SDG goals. So if we kind of wrap it up a little bit using, again, this China education example, you could say that the outcome is we are basically enrolling, right, students, right, from different regions. We can have a breakdown between female and male, right? So we're able to say at the end of 2021, we've enrolled X amount of students, X amount graduated, right? However, the impact is actually of these students. How many of them found a job? How many of them actually joined the active population? And as a result of this, how much have they contributed, right, to the GDP, for example, or to the net capital, right, per capita, right, which is a bit complicated. So the way we have to, do this is, first we have to be patient. It's not something that can happen, in one financial year. It takes several years, right? And second, the investors need to be very active where they're investing companies, encourage them to disclose metrics and working with them to come up with those metrics. Because as you know, and your audience knows, ESG is not a one-size-fits-all approach. We have the Europeans who are coming up with a promising effort in terms of standardization with the SFDR framework. That being said, in Asia, it might be different. In the Americas, it also might be different. So before we have this universal definition of ESG and also this maybe standardization of impact metrics, it's up to in our opinion, the asset managers to redouble efforts in terms of working with their investing companies to come up with these metrics in order to disclose them to their clients. So, that's how we address it. But we do acknowledge that this is going to be a multi-year effort. And our objective also is to be able to be as transparent as possible in order to avoid impact washing. So from our report, you can tell that we're not going straight into quantifying left and right, using a lot of estimates, using a lot of data that we can't verify. Because if we do that, then there's a potential issue of not being able to break down and explain to our clients where does that information come from, right? So that's why we want to be as diligent as possible, reporting metrics directly from our companies that we invest in, using active engagement, and also making sure that when it comes to projected impact, right, that we explain to our clients the benefit of patience, right? Because again, if I invest in a company today and I can report impact right now, That's great, but this is a growth philosophy, right? So the goal is to also invest in these companies and enable their positive growth going forward. And so hence the impact in this case might be projected. So that's why it's also important for the report to investors to explain clearly what is the impact that's being achieved, but also what is the impact that's going to be projected.
Yeah, I think that's really refreshing, actually. I mean, long-term sort of patient capital, but also, there isn't a panacea for some sort of magic data set at this stage. I mean, we're still trying to harmonise our electric plugs in Europe, let alone, but we still need electricity whilst we're doing that. So I think there's a lot of sort of good sensible pieces you say there. I mean, if somebody wants to actually, I think I noted, another phrase that you used, that it's an opportunity for investors to do their own, deep dive impact research. Do you kind of walk them through in terms of transparency and let them almost audit the projects, if you will? I mean, I don't know how you would phrase it, but how do you offer transparency to people on top of, your own evidenced good practice?
Right. So, there's definitely, that's why reporting is there, is to be able to break down the entire portfolio and then show them, right, each companies that you own through this impact thesis concept that we came up with. So what we mean by that is we want to avoid this concept that's happening often in the industry, which is called after the fact SDG mapping, which basically means my portfolio managers select securities that they believe will meet the financial objectives or alpha objectives of the strategy. And then you have an ESG specialist that will try to reverse engineer the investments and map it to SDG goals. That is not really transparency to us in terms of how the impact is aligned with the investment philosophy. So what we do for our clients is they have access to all of our research that is centralized, right, and shared across the company. And in that research platform that we've designed, you have not only the elements that explain the growth inflection points, right, of the company, but also and valuation and all of the traditional, if you will, fundamentals that one would expect from an active management strategy, but at the same time, how those are aligned with the SDG alignment and vice versa. So, if I'm talking to you about a water, supply company in Brazil or in China, we're not just going to say it's good because it's clean water. We're going to explain to you how exactly is the clean water theme aligned with the growth philosophy, right? And then, you can break down the entire story into an actual thesis, which is very important. So that's how we do it. And then the last piece that we do that's important is we also explain to our clients the time frame that we have with our investee companies. So when I say time frame, I mean, if this is a 3 to 5 year investment, we're going to explain clearly where we believe the impact will occur. And also if there's engagement involved, we break down, our stages of impact. We've engaged at that time. We've led the company several months to come back to us with more information on themselves, on their sustainability indicators. We plan on engaging back on that time. And then at the end of the run, when the engagement cycle is closed, we can explain to our clients what was the outcome.
Right.
Exactly. And then I'll just conclude by saying one other thing, Rich, that's important in terms of transparency is I talked about impact washing. One of the things that we want to make sure that our clients understand is when it comes to impact investing, there are some red lines that should not be crossed. So this strategy is very transparent upfront and excluding companies that are part of the Norges Bank's exclusion list, which is a world-class ethical exclusion list, right? So for example, no tobacco, no coal. It also excludes companies that have been involved in environmental misconduct, as well as corruption, and overall corporate ethical misconduct. But we also extend these red lines through the violations of the UN Global Compact framework also. So you see, what we try to accomplish here is to say, really a lot has to do with alignment of the investments philosophy with the SDG goals, but also at the same time, how do you prevent impact washing? And how do you make sure that you don't have a company in there that might be involved in a sector that is just incompatible with positive impact?
Absolutely. So just briefly, is there a role for technology in what you're doing? Although I didn't want to sort of panacea answer on data, but is there a role for technology? And also tell us in the same answer, what's next from American Century?
You've outlined it very well. The what's next is basically threefold. First is to continue, right, doing progress in enabling this improvement around disclosure in our investing companies. So redoubling our efforts around engagement, very important. The second component here is very much has to do with the metrics, the quantifying of impact, right? So I spoke about the difference between outcome and impact. So we came up with a series of metrics that we believe are unique. For example, something that we believe it's important is lives saved, right? So if you invest in a healthcare company that comes with lots of innovation around breakthrough drugs or breakthrough treatments, right? That could be your outcome. The treatment is there, right? But long term, how much people are you gonna reach, and out of those people, how many of them will be cured? That's an example of the challenge that you see between outcome and impact. So we're gonna work on that directly again with our investee companies. But then the concept of aggregation of data, massaging of data, and QAing data, so quality assessment of data or quality evaluation, if you will. That's going to be very important. And yes, technology will play a big role there, is how to make sure that we can capture as much information as possible in a way that's aligned not only with our objectives, right, as a alpha generator, but also, be able to back test, if you will, to kind of verify that this data is accurate, this sort of internal audit trail. That is going to be very important. And we believe that artificial intelligence, natural language processing can help us do that. But it's still early stage, and like with any technology, it's very important to have a human touch on it. So we believe that the two can cohabit or coexist in a peaceful manner, if you will, so that there's no contradiction between the two. But yes, we agree with you that technology is going to be a huge theme in 2021 and beyond. And we look forward to, of course, communicating the progress we're making in this area to our clients.
Fantastic. And people can get a hold of the report and read into a lot more detail than we could share today. At where? American Century?
Yeah. So no, it's a very good question. So this is obviously a strategy available to institutional investors. So what we always want to make sure that folks understand is when they go on AmericanCentury.com, they select the institutional investor website, and then there they have to select the countries in which they are, right? Classify themselves as a retail, financial consultant, or institutional investor. And then from there, there's an ESG webpage that details everything from all of our investment capabilities, the different types of thought leadership that we have there. And then they can find the impact report, as well as a brochure that explains clearly what the strategy's objectives are, who are the portfolio managers. We have a world-class emerging markets investment team that's been doing this for decades, and they all come, the majority of them come actually from emerging markets themselves. They speak the local language, so you can see their bios, you can see a little bit more than just their report. Is just to get to meet the team and get to find out a little bit more about what they are themselves passionate about investing in that region. And ultimately, that's what matters the most, is to have passion. Without passion, it's very hard to accomplish something, right? So look, we are certainly available for any additional questions you and your audience may have. If you cannot have access to the report, we would be happy to facilitate that.
Fantastic. Well, Guillaume, thanks so much for joining us today. I really enjoyed listening to your responses, and great to have our American cousins joining in this crusade. I'm sure you have anyway, but we're starting to hear more and more of you coming on Finextra. So look forward to hearing from you again shortly.
Absolutely. Thank you so much, Richard. Appreciate it. Have a nice afternoon.
And you. Bye now.
Thank you. Bye-bye.